Hey folks, Nick recapping the week ending June 5th. Oh, disappointing day for the Bulls. Why? Because we had great report on jobs. Remember how I told you we don't know how they're going to react? Good news, bad news thing. Guess what? They hated it. I don't know if they hated the report itself. They hated what it meant. They hated the fact that it pretty much solidifies that Yellen indeed will be raising rates this year rather than next year. Now, us here, we've priced out the fact that she's not going to wait. We've resolved ourselves that the rate hike is coming this year, and a whole bunch of people today did the same thing. They priced out the risk, and that was the sell-off. But the good news is that they rejected the lows. That was a scary morning. Let me zoom out. I guess that is zooming out. Let me zoom out. That was a scary move. And we closed little down, yeah? In fact, the small caps closed up almost 0.8%. These are the small caps. And let me show you the small caps on the day. They turned around first, even though they were scariest at the beginning. 123.3, I believe, was the low in the IWM. Guess where it closed? 125.4. Yeah? I told you the battle has been in the IWM all week long from last Friday. Guess what? It continues on to next week. Monday, before the open, I'll have a better picture as to what has happened in the open interest. And that'll tell me how they adjusted their position for next week. A whole bunch of money was lost in the small caps today, where in the RUT specifically, a whole bunch of money poured into the high twos, 1200s, and it's all went to zero, just wasted, because the breakout didn't happen. Remember how I showed you that the possible breakout will be up to here? That didn't happen. So hopium, thrown down the tube. That's happened so many times this year. So at some point, those people will stop doing it, and this is where you say the bulls are getting tired. Okay, but all by itself, and if I show you the week, this is the S&P, 2 weeks red in a row. This is the NASDAQ, 2 weeks red in a row. Look at the candle today for the small caps. Green on decent volume. All right, so let's see here. Rising wedge breaking down for the S&P, and we're leveling tabletop. The tabletop effect is here as well. Here we're drooping down. However, the last 4 or 5 weeks we've been trending up. Yeah, so maybe we're trending up to bust out. More on this a little bit later. All right, back to what happened today and what to expect. So coming into the week, we knew that I had a few things on hand as far as variables. I'm watching the small caps, I'm watching currencies, I'm watching Apple, and I'm watching the financials. Today, the financials were part of the story. How so? Let me show you. If I go to Market Watch, and let's go to, okay, right here, financials, look how big they are. What did I tell you? Green financials could mean weak markets. Why? Because it may come on the backs of higher rates, and markets don't like higher rates. I said it. So we saw this. We were prepared. People are saying when the financials join, they're going to bring the market higher. Maybe, maybe not, because it was offset by a whole bunch of other redness because they didn't like the higher rate idea. Okay? Why do I think that higher rates is what caused all of this? Well, let's look at this. Here's the 10-year, up 4% today, and breaking out from the first. This is the target of the first move, and which obviously triggers the second target, which is about here. So now they should be making their way up to here. Yeah. So higher rates are here. They're breaking out. So, like I said, higher financials doesn't always mean good news. All right, so financials played a good role today. How about next week? I don't know. Next week, starting with Apple, I'm going to pay attention to it in the morning. It's a heavyweight. If it goes up, it's about 20% of this guy right here, the Qs. It's about 20% of the Qs. So it can move markets. It's probably about 7 or 8% of the regular S&P. So it has the potential to move markets. If they unveil a flying car, proverbially speaking, it can move markets upwards and maybe provide this gumption for finally the bulls to go for that quote, and I used that loosely, mega breakout. Okay, so this week, another failed attempt at the mega breakout. Why do I say that? Because look at this. We lost Dow 18,000, and we lost 2100 S&P, SPX. We were 8 points below. So that's not good news. That's not good news. So let's see if I can look at the SPY. This is the S&P, and let me zoom into 6 months. We look at that. This is a long-standing. We've poked it a few times, but today we closed below it, and that happened one time here. That's not good. And this line, I can still draw it down that way. That's not good. But what's good is we've had a few bounces here that, you know, we have levels of support to draw upon. And this happened on 2 strong red candles volume-wise, okay? So let's look at the Qs, which are the NASDAQ. Same deal, 2 strong candles, strong volume candles, and the droop continues. Now this is a complete droop now, okay? So where are we headed? Are we headed to the white line? I told you that something will happen here. Look, boom, boom. We either break out or break down, break out to the white or break down. We broke down. What from here? Apple can determine that on Monday. What is not as bad are the small caps. Mega candle for a huge breakout to go to here. Remember that green target? Well, guess what? It fizzled yesterday, but now reignited. We closed above the green line. Are they going to target this? I don't know. We'll see. They have a tall order. Next candle is really important. What happens here? Good strong volume. Good strong volume. Okay? So next candle is really important. Those are the ranges. So those are important ranges. That's why we watch them. As far as what our rates are going to do, what's this going to do, nobody knows. Why? Because, first of all, we're in headline mode still, thanks to Greece, etc. Sprinkle a little bit of sentiments in there. You get a jumbled up picture. All the, quote, experts don't know anything. They whatever they think they know, the next day something happens to kind of squash it. We thought we were running with the bonds, then nope. We're running with yen, nope. Against the yen, nope. We're running with this, we're running with that. Today, the euro was down. That means that market confirms market, we're baking in a higher rate here. So that makes for a strong dollar. So things are in limbo, which could be at inflection points. Am I calling for a downturn? No, I'm just calling the fact that the uber exuberant people that are expecting mega breakouts all the time, it's no longer a sure thing. Now they're in doubt. First, it used to be buy the dip. You know, exclamation point, no doubt about it. Well, we're not getting dips anymore. So what are you going to say now? Buy the next all-time high, or, you know, buy into the next all-time high? But they've been losing more than winning in that proposition because we've been in a stalemate. Who's winning? Us, people who sell spreads, iron condors. They're working. That's why I like to do them. Now, Greece, what about headlines? Let me tell you what it takes. Somebody asked me, what do you expect as far as headlines? I don't expect bad headlines from Greece because they already kicked their own can by saying, hey, we're going to default. We're not going to make a payment this time. But guess what? I owe you $300 that I can't pay today. But, Mr. Bank, I'll pay you $4,000 or $5,000 at the end of the month. And the bank, the Eurozone, IMF, had to say, okay, because what are they going to do? Greece has the upper hand in this, in my opinion. They owe them so much money that they have the upper hand. So now the Greeks kick their own can. So now we may get a good headline from Greece, possibly. Any headline that's not negative from Greece could cause a mini pop, all right? So that could be a headline. The other reaction is now so many people have started talking about possibly the June rate hike. Now, if somebody comes out and says, no way June rate hike, boop, mini pop, all right? And the jobs report shows that things aren't so bad here. They're still looking good. Yeah. So I don't know what to make of this divergence between the small caps and the broader market yet, but I think it's more bullish than bearish until we get the next headline. So be careful. What am I saying? Leave room for error. I said it last week. Leave more room for error. All right. So the facts almost don't matter when headline is in charge. Yep. So just leave room for error, and we should be fine. The ranges are still at play, just about the same levels, kind of like what I communicated this morning. I will update us at the beginning of, before the open on Monday. You know, one thing I forgot to look at today, and you and I will look at it right now, are the transports. Wow, green on a day where oil was green. So the transports are no longer a good gauge for what's going on. All right, VIX was too red today, down like 3%, 3.4%. What? That doesn't make sense. All right. China is still a mystery. Their market has doubled this year. That's huge, and it was up 1.5%. But you know, that is so dangerous. Who knows? So a few tickers we looked at. I discussed today. Let's do that. Let's see here. Corning. Yeah. Let me zoom out. If I have Corning in my portfolio, I would look to book profits and or protect myself, because that is an ugly technical pattern or chart. You make a run, you fail, you make a better run, you fail, you make another run, you fail miserably, back to the neckline. So like, what is that? A complex head and shoulders, mountain, igloo, triangle of death, whatever you want to call it. If markets correct, or if markets have one bad day next week, it might be enough to push Corning down towards this first bubble and then this next bubble. I would be cautious with Corning. That's all I'm saying. Another thing is Priceline. I don't like what's going on here. If it loses this area, it could be down in the low 1100s in no time. So be careful there if you're long Priceline. Amazon. We thought it was going to break out one good candle above this flag, pennant, whatever you want to call it. Today, 2 red candles in a row. Somewhat disappointing. eBay, it's the opposite, but look at that. Fail, 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 trying again. This time looks like it's got some oomph behind it. So maybe this time the breakout will happen. Huh? That's eBay. Of course, it's a headline stock now because of splitting out some aspects of it. Micron, another disappointment. Ooh-wee. You know, fail, 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 and fail. Like we thought it was going to head to this one and that one with one trick candle. Let me zoom in to 6 months. You'll see that trick candle I'm talking about. This white one right there. They tricked us. We thought it was going here. Now it's not, and now it's knocking on the floorboard. So what's the problem with that? Yeah, let me show you. The problem is that this is a bounce point, right? Right here, failed, boom. October 15th, I believe that is. Yep, the October correction bounced hard. Guess what? It comes back straight to it. Straight back to it. Straight back to it from lower highs. Are the bulls getting tired of defending the zone? Maybe they're tired. So range is tightening, 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 just like the Qs. Something's going to happen, either here or here. And if we're trading the white, it might come closer to this end than that end. So you be the judge. Now, the direction is unknown, obviously, but the open interest suggests, as it is right now, that the path downwards is easier than upwards, meaning if they really want to break out, they really need a good reason. So they're market dependent. If the market corrects, it has some downside to it. All right, many more that can we say. Until I see any changes in the thesis, I keep trading the way I have been. How? I do iron condors. If I'm a nimble trader, I try to do them on a weekly or the bi-weekly basis. If I'm slower trader, I choose the longer dated ones, 4 weeks, maybe 2 months, maybe even 6 months out. It just depends on what suits my personality. All right, Nick signing out. If you have any questions, please let me know, and I'll get back to you really quick.